Good morning, everyone. Welcome to our session, Securing the Future, Safeguarding Customers in the Digital Revolution. I will be your moderator. My name is Roshani Zafar. I am the founder and managing director of Kash Foundation, which is a microfinance organization focused on providing financial services to women in Pakistan. I have a wonderful panel with me today, who I will quickly introduce. Ms. Sadia Khan, who has worked with the State Bank of Pakistan and the Security Exchange Commission of Pakistan. She brings the regulation perspective to our discussion today. Not only that, she's passionate about women in governance. She's also worked with the Pakistan Institute for Governance as the CEO and has been working on several financial inclusion related regulations. So we look forward to hearing from Sadia. We also have Manus Rahman, who is a pioneer and a trendsetter in so many ways. I met him over 20 years ago, and he was talking about setting up networks on the digital space which didn't even exist in Pakistan. He set up Naseeb Networks and also Rosie.pk, which is one of Pakistan's biggest digital employment platforms. His work didn't stop there. He has been working in several transformations in the fintech space. So we will be hearing from him in terms of insights on the future of digital fintech and financial inclusion in Pakistan. We have Kasif, who began his career in banking, but quickly moved on to digital financial services provision within the banking space, and is now the CEO of Finja, which is a pioneering effort to provide platforms for digital transactions across the country. He's done some phenomenal work, which has been a trendsetter and has opened up new markets and opportunities for financial inclusion in Pakistan, and we will be hearing from him also. And then we have Dr. Mariam, who brings the research and academic side to digital the digital debate that we'll be having today. She's worked a lot on consumer protection and the gender divide when it comes to access to financial services. We will be hearing from her. She's an assistant professor at LUMS at the moment. So we have a very exciting panel. Before we move into question and answers and a discussion, which I'm hoping will be interactive and inclusive and participatory, I'm going to do a very quick setting the current landscape for digital finance in Pakistan. We will be focusing on Pakistan primarily today in the session. However, we will try and bring in lessons from the global landscape as well. So if we move on to my first slide, which very quickly I will talk to you about how the unbanked space looks in South Asia. If we look at South Asia today, Pakistan has a staggering 79% unbanked, which means there is a huge potential for using digital financial services to sort of mind the gap, or to close the gap rather. If we look at the impact of digital payments in Pakistan, and as you know, many of you know that Claudia Golden got the Nobel Prize recently for the work that she's done on women in the economy. And if we twin the impact digital payments can bring to Pakistan, along with what if we close the gender gap can do, there will be a huge boost to the GDP, 7% if we bring in more digital payments, and 8% if we close the gender gap and bring it at par with the rest of South Asia. However, if we bring it at par with the rest of the world, the Pakistani GDP could grow by 26%, according to a McKinsey report. So there is a huge dividend, both from the digital side and the gender side, and we are going to try and talk about that today. If we look at just simple mobile banking transactions over the past couple of years, there has been a move in Pakistan. We are seeing the needle moving. So there is change that is taking place at that level. And we'll try and unravel this today when we talk to Kasif and Monas to see what's really behind these numbers. If we move on to the next slide, and I've already quickly talked about the fact that, Afshin, can we move to the next slide, please? If we move on to the next slide, as I was mentioning to you, fintech has the potential for empowering women and vulnerable groups. It can impact the GDP, as we've talked about, But when we look at gender parity between access to financial services in Pakistan for men and women, and we look at data that's coming out, Pakistan is actually is digressing rather than progressing. So there are challenges that we see in this space, and we will be looking at those. The first is gender disparity in mobile money usage. That actually pulls women back when it comes to financial inclusion and leveraging on digital or mobile wallets, for example. We also see vulnerability of inexperienced users. So this raises the question on literacy, customer education, customer literacy in terms of using these solutions. There are also hidden transaction fees. We are also seeing that creates problems when it comes to consumer protection, and we will be talking about that today. And then, of course, we've also seen cases of predatory lending apps that have charged usurious lending rates, and people are getting stuck in this cycle as well. So there is a whole customer protection side to this that we need to be aware of. So even though we see the huge opportunity, there is also a dark cloud hanging over all of this. And when it comes to the digital divide, and I was already mentioning that, whether it's telephony, access to smartphones, whether it's financial institution accounts, whether it is a transactional depth, we do see that women are not only are they lagging behind, but actually, as I was saying, we are regressing rather than progressing. So having set the stage, I would like to ask my first question to Sadia. Sadia, you've been at the crux of, you were in the State Bank when the microfinance ordinance was coming out, when there was this whole movement around standardizing and commercializing microfinance in Pakistan. Today, we have digital banks coming in, we have EMIs coming in. So what do you think, in your opinion, what needs to be done from a regulatory perspective? What are the good practices that exist, and what is more that we need to do to bring in financial inclusion and ensure that the vulnerable groups are covered, and we deal with all these gender divides and digital divides that we are seeing?
Thank you, Roshani. First of all, thank you for that excellent introduction, and greetings to the other panelists and, of course, all the participants around the world. Your question regarding the regulatory landscape for these developments, just to give the background, I worked with the State Bank about 20 years ago when the first financial inclusion strategy was coming about. And as you can imagine, the ecosystem was very different from what it is now. Right now, of course, there's so much more digitalization that we work with. And a lot of my most recent interaction with the regulatory institutions were really dealing with this new dynamic. Now, from creating a regulatory environment in which new players are encouraged, new startups are encouraged, it's very important. But at the same time, we wear two hats. One is to encourage development, but also to look out for the protection of the small investors, the consumers, and making sure that unsavory market practices are minimized or eliminated. So from that perspective, really walking the fine line between enhancing development in the sector, but protecting the consumer. One of the initiatives that we started was the regulatory sandbox. And I think Asif will talk about it a bit more because Finja was one of the participants in this regulatory sandbox. The sandbox, for those who don't know, is a way for the regulatory sector to try and test new products in the live environment, but by setting certain conditions, minimizing the number of customers, having certain caps, so that we're able to learn in the process, to learn what the impediments are, what could go wrong, and then try and cater the regulatory environment to cater to those particular impediments and those particular shortfalls that we look at. So for us, it has been a bit of trial and error as well. There has been definite movements in the sector. The new P2P, robo-advisories, digital money lending, buy now, pay later, all these initiatives have come about in the last few years, and a lot of them are being nurtured through these regulatory sandboxes. So I think in terms of what has worked, the recognition by the regulatory agencies that they also need to learn in the process, and we can do that by partnering with the private sector, creating a limited testing environment where they can test new products and ideas and innovate, and in the process we can learn as well. The other aspect I think which needs more work is actually the RegTech, or the subtech. I've always said that we need to open up the markets to any kind of innovative products and services, but the regulators have to be well equipped to be able to catch malfeasance or any malpractices that take place. Unfortunately, we are also in that development phase, right? Our digitization at the regulatory agencies also need to keep up with those level of digitization in the market. Until we do that, we will not be able to pay or be equal partners in this development process. So I think a lot of the initiatives from the regulatory agencies right now are trying to equip themselves better by digitizing themselves and the regulatory systems and the structure to an extent that they can create that enabling eco environment for new products and services to flourish, yet keeping an eye for malpractices, ensuring that the customers and the consumers are not put to a disadvantage.
Thank you, Sadia. That's very interesting. What you're saying is over the years, the regulator is also learning with the environment, and the sandboxing approach that you're describing has actually led to some of the new developments that we are seeing today, whether it's the digital banks or whether it's the EMIs that we are seeing. So Monas, I'm going to come right to you, taking some thoughts from Sadia. In your opinion, what are the ecosystem, and you've been a leader in this fintech space, you've been incubating from, and pushing many of the actors today who we see in the fintech space, and giving them the support. So in your opinion, what are some of the ecosystem changes that you have seen that are working, and where are the challenges that lie in the ecosystem for promoting digital financial services?
Thanks, Roshana. It's a pleasure to be here. Very much enjoyed what you were saying just now. Sadia as well, spot on. Things are working. There's a lot more that needs to be done, but a key sort of metric that I watch is the digital payments in the ecosystem over the last 3 years has grown from 5 trillion rupees to 45 trillion rupees. This is online bill payments, P2P transfers, merchant payments. That's a very steep hockey stick curve. So it's finally happening. A lot of people now are using their phones to do transactions. And one of the most exciting things that's happening now is, of course, State Bank has worked very, very hard on this. And of course, the Gates Foundation and Mukarandaz is RAST. Specifically, I'm talking about the P2M transactions, the person to a merchant, where you have a unified QR code, which anybody can use, irrespective of which bank they use. This is going to create another hockey stick curve on the back of this. And financial inclusion is going to accelerate as a result, because it's going to be so convenient to pay anywhere, anyone, small amounts through this P2M QR. All of these things are happening in parallel. One of the more interesting things that you also spoke about briefly is as these rails are improving and increasing and more people are conducting transactions, the footprints that they're leaving across various platforms now that are starting to integrate is offering us additional clues on how to score people and offer them credit, which is also very key. In Pakistan, we were stuck at sort of 2% of adults in Pakistan receive formal sort of credit from financial institutions. Over the last 3 years, that number has grown to 7.5%. Now, that's a monumental, it's a phenomenal increase because it's been stagnant forever. And it's happening on the back of these payments. And of course, as you mentioned, nano loans, these small apps that a lot of whom were doing unscrupulous loans, but a lot of whom are doing actually very, very interesting loans based on data, which the banking sector never really had the confidence to do. But we've seen that now we can profitably score based on data. And we're seeing that with our leading players like Jazz Cash and EasyPesa, as well as a few of the others. For me, it's very encouraging. You also talked about gender divide, which is a very, very key issue. And I think, we have two things happening. One, we have a footprint that's growing very fast with all of these great things happening. Smartphones are more and more accessible. There are lots of challenges for females, specifically the ID card issue, cultural issues. But we also have a very high rate of inflation now. We're at something like 40%. It's almost unaffordable for households to be run on one engine. And I think as a result of that, the cultural changes will also follow, because now it's sort of a necessity. So exciting times, I think, here I see, but lots of challenges on the fraud side. And I'm sure we'll speak about that a bit later. I have a lot to say on that as well.
Thank you, Mona. So you're saying the inflection point is about to happen, but that brings us to Dr. Mariam. regarding the digital divide when it comes to access to women. So the points that Monas was raising, what kind of challenges we do see that the app-based lending is enhancing. We do see a digital footprint emerging, but we are not seeing the same impact on women clients and women borrowers. So what is this digital divide all about, and what are the challenges regarding this, and what do we need to do from the ecosystem down to the product level?
Thank you for that question, Roshani. It's such a pleasure to be here, and such interesting discussions already happening. So I agree with Monas. I think that there's been a fundamental shift in the digital space overall, particularly post-COVID. And so I think COVID sort of amplified what was kind of already happening in spurts, where people didn't really have access to banks, they didn't have access to ATMs. They couldn't show up and stand in lines to pay their bills. And so, everybody, there was just sort of this mass exodus to trying to figure out digital payments. Now, this, to an extent, also impacted women, where post-COVID, women sort of, their traditional labor markets shrank, and the kind of traditional jobs they were doing disappeared. And so they tried to look at digital spaces to find work. And so now more and more you find micro-entrepreneur women, you find women sitting at home, working through the digital space. I don't know how many of you saw, but a couple of months ago, there's this great article about female farmers in interior Sindh, and an NGO went and gave them some agriculture training. And within that, they slipped in a 15-minute training on Facebook, and these women started selling their cows on Facebook. And they got rid of the middleman completely. And it's just one of my favorite case studies of what tech can do for women in this country. However, I do want to underscore all of this by saying that Pakistan, the 2023 World Economic Forum Gender Gap Report just came out, and Pakistan is still in the bottom 3 out of 146 countries. So when it comes to gender parity, Pakistan is nowhere near where it should be. And, there are quite a few challenges, actually, and I'm going to focus on just a few of them that relate just to the digital financial services. And it's not so much a divide as it is a spectrum, right? So when we say divide, often the understanding is that, if you have a phone or a mobile phone, a smartphone that has an internet, that divide is bridged. But if you are in a Pakistani context, if you are low literate, low income, if you have access to a shared phone or a phone that is monitored, that divide is not bridged, right? So it's more of a spectrum than an I have or a binary in terms of I have access or I don't have access. So I'd like us to keep that in mind. SIM registration and ownership, we find, is a big one. We spoke to quite a few women because Kash did this really fabulous rollout of mobile wallets across some of their clients. And we spoke to some of those clients, and women in rural areas are not even aware about the number of SIMs that are registered in their name. So when they try and register mobile wallet or they try and go and register a new SIM, they find out they have 10, 15 SIMs already registered through different relatives in their names. And so often for clients, it would take maybe half an hour, sometimes 2 days just to get their SIM registered or get a SIM, because women in certain labor markets, their fingerprints are erased. The kind of work they do, their fingerprints just don't work anymore. I think the biggest is literacy and social cultural challenges. Low literate women, they struggle to understand phones. When they have access to a phone, it's shared or it's monitored. And when you have a one SIM, one mobile phone, one mobile wallet setup, this doesn't work. The migrant women we've spoken to who've had disposable income to save, to invest, have chosen not to do it in mobile wallets, not because they didn't know. They're very clear. They said, we know Easy Pesa, we know Jazz Cash, we've used them. But the problem, Baji, is that the way I'm saving my money is I have Roscas. I have 3, 4, 5 Roscas going on in parallel. And these are secret Roscas. My family doesn't know, my husband doesn't know that I have these committees going on. And so when the bulk money comes in, I quietly will buy tangible goods, and that's how I will store my money. But the minute I put it on a mobile wallet, now everybody knows. And so just mobile wallets right now make things that are secret and private very visible, right? You start getting messages and you start getting statements, and there's a record. And that's really problematic for the way women deal with their financial and their patriarchal constraints. So we are a very gendered patriarchal context. And so if women want to hide money, they want to have their own savings, and they want to be able to spend it the way they want, they have to hide and do it. And anytime you make it digital, it makes it also transparent. The third thing I do want to touch on a little bit that's emerged from our recent research actually is that when women have tried to use mobile wallets, what they've come back to us and said is that, and I'm quoting a participant here who said that when a person cannot understand the procedure, then it feels like a lie. It is very hard to trust that way. So they might understand the steps they need to take, but they really don't understand this intangible form of money. And that to them makes it feel very deceptive, and they have a really hard time trusting a system like this. They've also experienced unauthorized withdrawals. So there have been instances where the users' husbands and sons have gone and withdrawn money and used it. And so it ties in again to this idea of the mechanisms women have in place already to save so that it is just accessible to them. And mobile wallets currently aren't really tuned very well to the way women are currently managing their finances.
Thank you, Dr. Murray. We've raised some really important red flags: transparency, confidentiality, consumer education. These are all things that enhance rather than reduce the digital gap. So I'm going to, gender gap. So I'm going to come to Kasif. Kasif, the jury is out. We've heard a lot of points of view on what digital financial services can and cannot deliver. Technically, the hypothesis is that we would have a better world if everybody had access to a digital financial account or digital payment services. So let's hear from you what your experience is in your work in Finja.
Okay, thank you very much, Roshane. Great conversation going on. Finja is focused on productive lending. And, productive lending is that when we go out and give digital credit to businesses, and then we ensure through the protocols that we put in place that that money is actually used in a business transaction. That also means that we would never go out and give cash, because we all know that cash is fungible. So, Finja is a fintech which is focused on working with SMEs in a way where we go out and create credit lines for them, and then they use these credit lines generally to make business expenses or buy supplies upstream. And when they go out and sell these supplies, they come back, repay the digital credit line, and take that credit line again. So basically what's happening here is that Finja is becoming a partner with the business, and they are now going out and investing in that business. And only if that business goes out and makes money and wins, would the business pay Finja back and take a credit line again. And in the event the business is unable to sell the goods or whatever, Finja would go back, reclaim the goods, sell it in the secondary market. So the design is very Islamic. It's based on win-win. It's building on the digital credit fundamentals as the ecosystem builds up, etc. But that's what Finja does. But I want to speak about for a minute or two about digital credit. And there we need to realize that markets like Pakistan, and we've been speaking about it, so few people are aware of or have first-hand experiences taking digital credit. So now, or credit at all, but digital credit is almost like instant noodles. It's like online commerce. It's like on your fingertips. You want to take a credit line, and before you know, you could apply one and you have one. And now the business models are such that you're not limited to taking one credit line, but you can go out and take multiple credit lines. You're almost encouraged to do that. Now, you have no credit experience, you go out, take a credit line, you go out, take multiple credit lines, and now you're trying to pay one through the other. But the worst part is that now all of these ecosystems are starting to talk to each other, and the consequences are dire, and people don't realize this. So you're on the credit bureaus, you're socially, you could be exploited. The government can look at what you're doing. Your immigration can get impacted. Whatever, relationships that you're trying to build can get impacted. And, the Pakistanis and markets like Pakistan are just not ready and equipped for this kind of lending. So I think that while on one side, and we all know that digital credit, is the precursor for behavior change to digital financial services. And then when you get businesses and people included, that's when they can move up the opportunity pyramid. But I think there's a great danger lurking here, which is around lack of awareness and education around the consequences of how easy it's become now to get these type of digital credit loans, and then and what would happen if we are unable to furnish them. And I think that's what we are starting to grapple with here in Pakistan.
Very interesting. I think, Kashif, what you're really talking about is the aspect of responsible finance. How do we get the money out to those that can really use it productively? So I'm going to switch very quickly to Sadia. Sadia, some of the debate that we're hearing about is consumer protection, responsible finance, gender equity. All these issues seem to be honing into scaling up microfinance or financial services. So what do you think is the role of the regulator when it comes to promoting consumer protection? You were mentioning earlier in your comment that regulation is made to protect the investors to some extent, so and the sector and the banking sector per se. So what do you think is the role of the regulator when it comes to consumer protection? What can be done to promote this so we avoid the kind of pitfalls that Kasif was alluding to?
Roshani, data privacy is, I think, one of the most important legal issues in the fintech industry right now. As you know, the data protection law has been under the national consideration for some time, and hopefully that will see the light of day someday. There also the consumer protection framework that has been worked on. From the SECB's perspective, as I mentioned, it's been an evolving trend. And I mean, I give one example. When one of the products was first launched, there were 600 complaints within the first month from the consumers because, one, they didn't know enough of the products. There were unethical marketing practices. There were unethical collection practices, and lots of other issues surrounding use of their data. So what they did was introduce various measures, including putting exposure caps, pricing caps, transparency of disclosure around new products and services, limiting the access to the user's data. Now it's inadmissible to use photo gallery and contact list access from these digital platforms. Earlier that was the case, and you can imagine having that kind of access, what kind of power it was giving some of these unethical lenders over their customers. And of course, the specific requirement to protect the user's data. Having said that, you know, the laws and regulations can just do as much as laws and regulations can do. A lot of it depends also on the firms, the governance structures that they employ, and this is where you mentioned governance is my one of my passions. It's very important when the new companies are being set out that the governance structure and the policies and practices are such that the most of these ethical practices are rooted out at the very start. On the other side, as Mari mentioned, a lot of this has to do with financial literacy as well. The customer and the consumers need to know their rights and what they're getting into. And lack of familiarity with some of these things are also preventing them from entering into the sector. So similar to what the trends we witnessed even 20 years ago, on the one side, lethargy from the institution side and lack of literacy from the consumer side, that bridge still needs to be sort of overcome. We need to do more financial literacy work for the consumers, and we need to try and encourage the firms themselves to come up with holistic practices to root out these unethical practices, misleading, deceptive practices to acquire customers, as I said, unethical collection techniques, and use of data which goes beyond the realm of what the regulation requires. So the regulation has a large part to play to answer your question, but it also depends on the environment and everybody playing their due role, whether they are the institution or the consumer, to be aware of their rights and to be able to protect themselves as well.
So Sadia, just a quick follow-on question to what you were saying. In microfinance, we tend to have this debate, and it still continues, sustainability versus commercialization. So do you think the profit maximization vision is something that has impacted financial inclusion negatively, or is it something that is leading to scale? Where do you think the balance lies in this? And how does digital financial services play in all of this?
So, Roshani, this is an important debate and has been going on for some time. I can give my personal views on this, given my exposure to microfinance earlier and also through the regulatory system. Look, I do believe that commercialization objectives do create mission drift, especially when an institution sets out for the larger good in terms of financial inclusion, affordable finance, elimination, eradication of poverty. These are noble objectives which do not always sink in with profit maximization. So it is very important for the institutions to understand where they are on this realm between the social objective and pure commercialization. There are, of course, many institutions with the hybrid approach, where the profit maximization is the end goal, but they also ensure that there is no mission drift along the process. It's very difficult to do that, as you can sort of appreciate yourself, Roshani. But so my objective is, again, going back to governance. The institutions have to be clear what they're playing. Please do not confuse your social objective with your profit maximization. State clearly which end of the spectrum you belong to, go for it. But then if you are all for profit maximization, please do not put in your objectives that you are doing the social good, which does not always come about because of the end objective of profit maximization. It is possible to do both, but it is difficult. But staying focused on your mission is important if that's really what you want to do.
You're shaking your head on this, and you probably wanted to sort of interject and comment on this commercialization, profitability, financial inclusion, the greater good, and entrepreneurship and innovation in the digital financial services space. Where does this all come up to enabling us to meet the mission and vision of microfinance?
I think the end goal is, of course, those use cases which we create. And we have a lot of great initiatives that have gone after financial inclusion and creating wallets and accounts, but we find that those accounts become stagnant, they're not used, and they become proxies. So ultimately, we need to have meaningful, useful use cases that are compelling and that people need, and that will automatically drive financial inclusion. And as this whole ecosystem sort of gets more mature, we're seeing that happen faster. For example, e-commerce has grown 320% in the last 3 years. These are use cases that are driving people online to shop online. They're buying things now through their sort of WhatsApp, and they're paying through these sort of wallets. But we also have to understand that the majority of adults now, something like 80% of adults now have access to internet connected smartphones. And because of that, the majority of those people are first-time users of the internet, and the first time they've used the internet is on this thing that we call a smartphone. So there's a severe lack of understanding on how this works, how these platforms work, and there's a lot of exploitation that's happening. And because of earlier that was spoken about, who Mariam was saying, it's very right. There's transparency that's happening. It's good and bad. The good thing about it is it allows us to have credible points of data that we can score and make informed opinions about. But the bad thing is that once that data leaks out, it can cause a lot of harm. Not only is there education needed on the side of consumers who are new entrants into this new economy, who often will hand out their OTP codes and then find out that cash was swept out of their wallets because they didn't really understand. They trust individuals on the phone. But also on behalf of the new players, the fintechs and the new economy organizations who are building software forever, but never had to worry about this sort of hacking threat and the ability now of hackers to break into almost anything. There are toolkits out there on the internet that you can buy on like the dark web that allow you to break into probably 90% of the platforms out there. It's not very hard right now. So our software that's being built, the fintechs, organizations in the government as well, banks especially, are not fully tuned to this. And there's a lot of sloppy software programming needed because we haven't erected the gates in the right way. So I think it's going to get worse. I think we're going to find a lot of exploitation happen. The regulation is very important. I'm personally very impressed with the speed at which SECP has moved. and sort of the frameworks that are created. A few of them, I think, are going to be tweaked with time. But the fact is that we had a regulator that responded very, very fast. It's inconvenienced a few of us in the fintech space, but I think overall, it's a good thing. There's a lot of learning that needs to happen on both sides, both from the consumers as well as the organizations creating these platforms.
Thank you, Mona. So coming back to collaborations, the point that you were raising, Kasif, I'm going to move over to you. So there are the fintech providers, and then there are the traditional microfinance conventional providers like Kush, for example. So how can these collaborate, and what do you think are the spaces where various entities that are either practitioners or in the digital financial services space, how can they work together, and what do you see in the future in terms of collaborations?
Thank you for this lovely question, Rushane. I think Monas and some of us hold the same view that the future of our industry actually depends on collaboration. And one of the biggest events which is happening in financial services industry, I would go say as far as the last 300-400 years, which is since the invent of retail banking, is what's called embedded finance. And I think it's this embedded finance and terms like BaaS, banking as a service, and BAP, which are actually the glues and the frameworks through which these partnerships will happen. So the way these partnerships are happening is that banks and microfinance banks are the bigger platforms which have the licenses, and a lot of time they have trust and they have the capital. Now the fintechs or the new age enterprises which are coming in are the conduits that are going to go in and start to embed themselves into the new age economy. And the new age economy is all portals and apps and all of them, and they are non-licensed. But and SMEs included, all SMEs are also digitizing their value chains and their front ends. Now, these SMEs, these new age economies have their own assets. Unlike the banks, they don't have capital, they don't have trust, and they don't have regulatory licenses and compliance and so on. But what they have is customer data. And what they have are the suppliers and the consumers and the data around them. And obviously the technology layer and the user experience and ability to go out and build these products and change their value propositions very quickly. Now, when you mix all of them together through the embedded pipelines, what you have is the fintechs going in and embedding their lending buttons into these new SMEs and new age economies, and the banks and the microfinance banks coming in and providing that capital. And through that, what's happening is that the customers and the suppliers and the businesses, without altering their customer journeys, will be able to indulge in digital payments and digital credit right at the moment of truth. And this is so big that what it's doing is that it is changing banking, which is the last standalone vertical, into a horizontal. And every new age company or SME is actually in the coming months and years is going to morph into a financial services entity, because now customers will be able to avail digital payments and credits right into their apps and into their portals. So just like 15, 20, 25 years ago, technology was a vertical. And if we wanted to think about technology companies, we thought of IBM and things of that sort. Now, every business at whatever scale it is actually a technology company, because it can't fulfill customer experiences without being a. Similarly, there is a clear movement where all enterprises, whether they are SMEs or non-licensed entities, are going to turn into financial services through this embedded finance. And at the heart of it is the banks and the microfinance banks, and on top of them, these lightweight fintechs, which we call the NBFCs, EMIs, etc. And the extreme end are the SMEs and the non-licensed entities. So it's through this collaboration that financial services can go out and really unleash a lot of new value that we haven't seen yet. And it's very, very exciting to live through this.
Kasif, your optimism is infectious. I'm going to move to Mariam and ask her this question. If we were to design a digital payment platform or a system that wouldn't leave the vulnerable groups behind, for example, the elderly, the rural women, the women per se, women entrepreneurs, what would we need to do? What are the 3 or 4 things you think or principles that need to be embedded in that system?
Thank you. That's a great question. You know, there's no magic bullet here, right? And I'm a technologist and a human-centered designer. And so when I look at the way that tech is designed and deployed in Pakistan, it's very tragic. I find, as a technologist and somebody super educated, I find my banking app to be just so counterintuitive, right? Forget about somebody who's low literate, low income. We're not putting users at the heart of anything that we do, right? We're putting money and just sort of these commercial infrastructures at the heart of what we do. And unless we start centering users, I don't think you're going to get any of your excluded populations on board. They'll twist and they'll turn and they'll try their level best to use it. We've had women say to us, I really tried to use it, but I went to the shop and the shopkeeper said, oh, your OTP never came. But then later I found out it did come and he took all my money, because we're not centering users, right? The way we design things, the kind of messaging we do, when you get a message, you could have done a voice message, right? If you're working with a low income, low literate populations, why are we not embracing voice as a mechanism of communication? WhatsApp is one of the most ubiquitously used applications among these populations because it is voice enabled. They can use media and they can leave voice messages and so on. They understand what's happening. So they don't have the same kind of fear and apprehension of using WhatsApp than they do of using any other app. And so I think, I was in Africa last week, and one of the things that's so amazing to me is that they have some similar challenges of low resource, low literate, financial inclusion. And one of the things that they're so forward looking when it comes to human-centered design. I used a financial chatbot, AI-backed, voice-based, that can walk me through my finances, that can help me understand how I can save better, what assets I can invest in, and this is for farming women. This is for low literate, low income women who have very little disposable income. It's voice enabled, regional, local language. And it is very conversational, helping them map their financial journeys, the tools they can use. We're not even going there, right? In Pakistan, we're not even thinking about, oh, here's a banking app. How do we voice enable it? Can we build in a chatbot? Can we figure out a way to hold people's hand through these really scary transactions? Because for most people, their money is where it's all at, right? So they can't afford to take a risk, even if it's like 20 rupees or 100 rupees. But we're not holding their hands through any of these transactions. We're making these massive English-based cumbersome applications and systems, and we're saying, well, it's your fault because you are low literate. That is your challenge that you need to figure out. That's not how tech works, right? That's not how tech that goes viral works. TikTok is one of the second most used apps, also voice-based, speech-based, video-based, local regional languages, right? The current ways in which we are trying to get people to use mobile wallets, it's mostly English. If we use Urdu, then it's a really hard to read script on the smartphone. There is no hand-holding. There is no messaging, right? There is no messaging that says, here are ways in which you can be defrauded. Here are things to look out for. There is no consistent messaging that warns me that, oh, maybe don't give out your OTP, maybe figure out an alternate way. Here is an alternate way of doing it, as opposed to giving the OTP to the shopkeeper. And if you give him the OTP, here are ways in which you can be defrauded. So I think, the only principle I would say is putting your users at the heart of the design, right? Really thinking and not looking at it as we can't, I was sitting at a table 5 years ago. I just moved to Pakistan, and it was a table of fintechs, CEOs. And I don't know why they invited me, because they didn't want to talk about gender. But when the gender conversation started, they said, well, this is a population that's too hard to design for, so we will wait for them to catch up. Don't do that, is what I would say. Don't think about it in terms of this is too hard a population to design for. We will wait for them to catch up.
Mariam, great message, putting the user at the center of design. I think that's something we can all learn from. We have some questions. Before we go to the questions from the audience, I just had a general 1 minute response from each of the panelists. Where do you think the next disruptions are going to come from in technology disruptions are going to come from in the financial inclusion space? Monas, we'll start with you, Kasif, Mariam, Sadia, whoever wants to go first after.
For me, it's very clear it's going to be AI. The sort of stuff we're seeing that AI is capable of doing over the last year and a half, it's mind-boggling. It's especially useful tool for us here in Pakistan because these LLMs, you talk about Google Bard, Chat and GPT, these APIs, which are now available to use them, they actually speak Urdu. And they speak Urdu both from a written Urdu script as well as Roman Urdu. And Roman Urdu is the most popular way that people communicate here on their WhatsApp. And they spell things in various ways. They don't spell the Urdu words in the same way, and there's context there. This has been a problem that we've been struggling with forever. How do we get intelligent information out of these random chats? And now we've built this WhatsApp chatbot with AI on the back, with an LLM on the back. It's talking in Urdu. It's explaining things to you. It's doing things that you didn't program it to do. I can ask it a question because it has the data. It will give me a contextual answer that actually makes sense in my language. This is happening now on the ground. We've actually built an ordering chatbot for retailers who can order from their suppliers, in Urdu. We've built chatbots like this for e-commerce sites who can now order. So there are lots of innovations going on in AI. And I think for us in Pakistan, we must embrace it the fastest because, like we were saying earlier, Mariam is absolutely right. We haven't built those user interfaces. They're going to be voice-based. They're going to be chat-based. Even voice now we're able to do through this AI. It's become incredibly easy and incredibly cheap. And I think that's where we're going to see a lot of change in the future.
AI is the future. So Kasif, what do you think? What's your response to this? What's the next?
Yeah. No, I mean, I obviously agree with Monas, but for me, the bigger thing is that, it's the age where systems are getting interconnected. And it's an age where licensed financial entities are going to go out and give their rails to unlicensed financial entities to build financial products on top. Now, if there was no AI or machine learning, we wouldn't be able to make decisions in the real time. And building all of these railroads and enabling non-financial entities to operate as financial entities and have financial brands without the power of machine learning, there'll be no traffic on those roads. So I think it's the combination of machine learning and AI, but really the ability of the financial services industry to move from a vertical to a horizontal and then almost impregnate all the non-financial business models to have then payments and lending within them. That's really, the fascinating thing that's happening. You're on mute.
So the practice and the theory has to come together to have the impact, as Kasif was saying. Sadia, from a big picture perspective, what do you think the disruption is going to be?
I agree with Monas and Kasif. I mean, and artificial intelligence is there to be taken advantage of, and more of that is to come. Cloud computing, I mean, that's a challenge that we need to grapple with here as well. But also, I think we were talking earlier about collaboration and the need to integrate the various sectors. I think a problem here also is that we work in silos. And with artificial intelligence is also the scope for collaboration, either between regulatory agencies, between institutions, or across the board. So I think it's important that we look at it not just from the end consumer point of view, but how to facilitate the entire ecosystem by better integration between the various parties.
Great. So I think integration matters. Mariam, what's your take on this?
So I would say AI, but if I may, Roshane, take one minute to sort of, I would quantify the little bit and say ethical, just, equitable AI. I think I would be very, very cautious with the way AI is sort of being supercharged, and I would be really careful in the ways in which it's deployed in a Pakistani context and being intentional about whose data is being represented. The data that is being used by LLMs, some of this work I've done in health, and the kind of responses that LLMs give because the data that the LLM is built on is all of the data that's out there, right? A lot of it is it's scraping from the internet. That is not equitable data. It is not contextual data. It is data that's coming from context that is very far away from ours, especially if you look at the women and the way they're represented and the kind of responses they need. So I would say AI, but I think that we need to be really intentional and thoughtful about how we use these tools for what and whose data they're based on.
Absolutely, Mariam. We can't stress that enough. We have to be ethical in the way we use technology and even digital financial payments. I remember coming across a digital financial provider who was using the phone data from the customer. In case they didn't repay, they started sending messages to their mother-in-laws to make them repay. So I think that's entirely unethical. That's not something, the kind of practice we would like in the sector. So one of the questions has come, Kasif, I think I'll hand it over to you. What are the common forms of digital online fraud and how can we prevent them?
One of them is obviously related to identity, and we are seeing a lot of identity theft going around, where people pretend to be someone else, also known as phishing in a way, where I go out and steal your identity, and now I pose as you, and then you are not even aware. And I go out and start to take lots of loans on you. And what we are discovering is that a lot of these frauds are actually happen from inside of your inner circle. So it's like a lot of times these are, younger family members or people that work in your household or in your office environment, etc. And they have these, they have access to your credentials. And you don't suspect these people to play this, but that's like the main thing that jumps up on us. But I'll open it up to other panelists to take a crack. You're mute.
Yeah, the prevention was the other part of the question. So how do we prevent digital fraud? What do we need to do?
Yeah, I mean, for that, I mean, I think it's becoming more and more important that we take care of our identities. And, digital identities are becoming very important. So if our ID cards, our bank accounts, and, other information like our PIN codes, etc., they're becoming more and more important. And I think regularly we need to make a practice and go and see what's being stated on the credit bureaus, etc., as well. That would be key too.
Great. So we have another very interesting question. I think Monas, Kasif, and Mariam perhaps can comment on this. How can fintechs or institutions help make the tech sector a safe space for women? So how can fintechs and other microfinance institutions work together to make the tech space safe for women? Any thoughts on this?
I mean, I would say design better. Design for women, right? Like, I think much of the way that the fintech and much of the tech industry in general, and not just in Pakistan, but I think globally, the tech industry is not tuned to gender design. And I'll give you a very brief example of what I mean when I say gender design. When I moved back to Pakistan five years ago, I'd forgotten what Lahore looked like, and I relied on Google Maps heavily. And we've all done that. We've all used Google Maps extensively. Google Maps has a lot of my data. It knows where I am, which city I'm in. It knows what time of day it is. It knows the street I'm in. And yet, post 10 p.m., 11 p.m., I'm driving around alone. Google Maps has never once given me the option of picking the safe path to get from A to B. It knows the crowded roads. It knows areas that are commercial. It knows areas that are these back alleys, residential, quiet, dark. It always takes me from A to B, the fastest route, not the safest route, because it doesn't recognize my constraints as a woman in a context like Pakistan. So when I talk about gender design, that's what I mean. I mean, really understanding the needs and the constraints that women have in the place and the space they exist in. And I think fintech really needs to sort of, to make it safe for women, it needs to sort of incorporate that ideology of sitting down and trying to understand. For example, I talked about transparency and privacy. Those are central to the way women operate, whether it's when they're using WhatsApp or when they're using a banking app. Having money be private to them and that nobody else is aware of, and what they spend it on being known only to them, is central to the way they handle their finances. The fintech space ignores these key aspects of how women work with their money. So I would say incorporating those.
Great. Thank you, Mariam. So coming to you, Monas, one of the questions is very interesting, and I know you've done that with Dukaan. You were trying to get more women onto the platform. The question is there a market segment, a target audience that digital financial services are not currently catering to? And how can digital financial services be enhanced or improved to include those segments? So what's your experience made, and what do we need to do?
I mean, clearly we have this very large SME with segment, it's 40% of your GDP, 80% of your non-agricultural workforce. These are people more towards the bottom of the pyramid, not very educated. They don't have the technological expertise to understand how to do online transactions, how to use those online transactions to enhance their business. E-commerce plays a big role. And Dukaan, another startup I'm involved with, we've been working very, very heavily on this. So we've embedded financial services in that platform, and we have outreach to let people sell things quickly on their smartphone with a lot of education, a simple interface. And we have rolled this out at scale. We've learned a lot of things. And one of the biggest things we learned is there's a tremendous amount of education needed, because as I mentioned earlier, most of these people are first-time entrants into this new economy. So you have to teach them basics from start to finish. And there's a whole sort of a journey that they need to go through. So I think education is going to be a very, very big piece. We aren't doing enough of it. Eventually it will happen. When those use cases become so prominent that people force themselves to learn, they will learn, even if it's in English. We've seen that with these Uber drivers as an example. But in addition to that, I think fintech providers need to be more aware of the cultural nuances. A lot of us come from the West and we build apps like we make apps in the West, we make like a PayPal app, but there's so many cultural nuances that we need to factor, like privacy. This privacy problem of a shared smartphone, this is a technological problem that we should be able to solve. I should be able to give you extreme privacy on my app so no one else can even see my app. That's not very hard to do, but it seems like a major issue. So I think there's a lot we can do as we engage with the field, the market, and researchers to improve the experiences.
Great, thank you, Monas. Sadia, it's a question for you. Talking about the ethics of data and AI, talking about data privacy and all those, and data protection and all those aspects. So the question is, what can governance do? What do we need to do from a governance perspective to address these concerns?
Thank you, Roshani. So from the governance perspective, the appropriate policies and practices have to be in place, not just at the board level, but filtered down to the entire organizations to understand what are the go areas, what are the no-go areas. Often, I think the sad story about this country, maybe many around the world, is that we're great at making policy and practices, but very lax in implementing it. And I'll say that from the regulatory perspective as well. We're great at making new regulatory frameworks, but in terms of implementation, we often lag behind. And in terms of data privacy and enforcement, I think it's very important that we're able to make examples of that through appropriate action when it's needed expeditiously, so that the message goes through that somebody is looking out for these issues, and necessary action will be taken when necessary, so that people know that these are areas that they will be taken to task for should they transgress those boundaries. Now, sadly, that is not just limited to the digital world. I mean, that's also the same case we see fraud and crime taking place elsewhere, that people get away with it because the enforcement is so lax. So I would encourage that from the governance point of view, whether it's internal to the organization, take cognizance and take action when necessary. Make examples of employees who are transgressing those policies and practices. And from the regulatory perspective as well, take action expeditiously so the message goes through that somebody is looking out for these interests, and these are important matters to be taken at hand.
Thank you, Sadia. That's very enlightening. Kasif, just one very quick question. As you know, conventionally, microfinance has a high touch approach where we go and handhold the client. So the question here is very interesting. It's saying, how can AI deal with that side of it? The whole, the emotional quotient of the client. How do you balance that aspect?
The first thing is that I think it's a great opportunity for the microfinance industry to use a combination of machine learning, AI, and digital lending, and completely eradicate the physicality out of the process. And you've done this really well, Roshane. And also, take cash out of the equation. Why the microfinance banks have not globally, I would say, lived up to their potential is because their processes are rooted in physicality, and then they are handing over cash and recovering cash, so their operational costs are 30% or thereabout, and that's why they have to charge exuberant rates. Now, once you bring in machine learning and AI and you digitize the credit process, then what's happening is that you're engaging with the customer digitally, they're engaging with you digitally, there is no physicality, there is no cash. So that means that your ability to score customers, to engage with them, to onboard them, to disperse capital to them, to collect capital, all changes completely. That means your service costs come down, and that means you're operating in a brand new paradigm. And I think microfinance banks, as they bring on AI, they bring in digital processes, and then they partner with the fintechs and start to embed their lending apps into individual apps and business apps, we can see a resurgence of the microfinance businesses.
Great. Thank you, Kausif. On that note, this was a great discussion. Thank you to all our wonderful panelists. Let's give them a round of applause. Thank you so much for joining us. Just very quickly to recap, I think we have a lot to learn, which is what we sort of understood today. There's a huge opportunity with digital fintechs coming in. However, as we also learned that we have to get the fundamentals right to really embark on this journey of financial inclusion together. So thank you again, everyone, for your time. It was wonderful to see you, and I hope to catch you soon again. Thanks.
Thank you.